Welcome back to The Explainer. Today we are diving headfirst into this wild friction between groundbreaking biotech science and, well, stark financial realities. We're looking at Nurix Therapeutics. It's kind of the textbook example of the high-stakes, high-reward biotech world. We've got incredible medical promise on one side and the massive piles of cash needed to get there on the other. So let's get right into it. All right, let's just hook right into what's grabbing Wall Street's attention right now. We're talking about a towering average analyst price target of $30.94 for NRIX. I mean, when you see a number like that pegged to a clinical stage biotech company, it immediately tells you analysts are seeing some tremendous future value locked up in their drug pipeline. But here's the catch, and it's a big one. There is a massive discrepancy between that lofty target and the current trading reality. You look at the chart recently, and the stock's been on this multi-day fade down to around the 1464 to 1530 range. So this sets up the ultimate question for us. Why exactly is there such a huge disconnect between Wall Street's expectations and the actual market price? Section 1, the protein degradation promise. To understand the upside here, we first need to look at what they're actually building in the lab. So, Nurix Therapeutics isn't just, taking shots in the dark here. They've built a really formidable reputation around an AI-integrated discovery engine. They're literally using advanced artificial intelligence to identify and tackle virtually any protein class. The goal? Designing highly specific, innovative medicines for patients battling cancer and autoimmune diseases. And that brings us to their big idea, targeted protein degradation. This is absolutely crucial. Instead of traditional drugs that just sort of bind to and block disease-causing proteins, Nurix's medicines are designed to literally destroy those proteins and completely remove them from the body. It's a fundamental shift in how we treat severe diseases. If they nail this, it could be absolutely revolutionary for patient care, a real game changer. Section 2, Wall Street's bullish outlook. Let's see how that cutting-edge science actually translates into Wall Street's highly optimistic projections. Check this out. Out of 17 analysts polled by S&P Global, a staggering majority rate the stock a strong buy or buy. We're looking at 11 strong buys, 5 buys, and only 1 hold. Notice there are 0 sell ratings on the board. This consensus represents a potential upside of over 100% from current trading levels. So yeah, institutional analysts clearly believe Nurix has a winning formula. Now, the crucial engine driving all this bullishness is their robust pipeline. Their lead drug, Bexobrutideg, is currently racing toward phase 3 trials and potentially even an accelerated approval submission for chronic lymphocytic leukemia. Beyond that, they've got zelabrudomide and NX-1607 in phase 1 trials. They have multiple shots on goal, and honestly, that is exactly what Wall Street loves to see in a biotech firm. Section 3, the financial reality check. Because, as we know, developing these miracle drugs is astronomically expensive. This table right here clearly outlines the cash burn narrative. Look at the shift from Q1 2025 to Q1 2026. Revenue shrank from $18.5 million down to just $6.3 million. Meanwhile, research and development costs, they spiked to over $84 million. Now, this R&D surge is obviously tied to enrolling patients in these massive clinical trials, but the immediate result is a net loss widening to over $87 million for the quarter. So to fund these massive trials, Nurix has been actively tapping into the market by issuing stock through at-the-market financing deals. And while this does bring in much-needed cash, it obviously dilutes the ownership stake of existing shareholders. You can see outstanding shares ballooned from approximately 83 million right up to over 110 million year over year. And despite holding a very healthy $540.7 million in cash and short-term investments right now, management explicitly warns in their filings that they anticipate needing substantial additional funding. They've essentially acknowledged that this current cash runway simply won't be enough to get them all the way through the commercialization of their drug candidates. It is the classic biotech dilemma. Section 4, Big Pharma Partnerships. Fortunately for Nurix, they aren't going at this entirely alone. They are actually collaborating with absolute giants in the pharmaceutical space, Gilead, Sanofi, and Pfizer. These partnerships are huge because they unlock the potential for billions of dollars in future milestone payments and royalties. We are talking up to $1.8 billion from Gilead, $930 million from Sanofi, and a staggering $3.4 billion potentially from Pfizer. But here's the catch. Remember that revenue drop we saw a few slides ago? That happened precisely because the initial research term for the Sanofi partnership concluded, which caused that specific collaboration revenue to drop to absolute zero for the quarter. It's a stark reminder for us that these funding streams are super volatile and highly dependent on hitting strict milestones. Section 5. Retail trading and volatility. Mix high hopes with high cash burn, and you get massive price swings. Recently, we saw exactly how fast sentiment can swing. A pretty vague Form 4 filing indicating insider activity hit the wires. Because the headline didn't specify if it was a buy, a sell, or just an equity award, speculation just ran wild. The stock spiked pre-market into the mid-20s on pure hype. But when the details remained unclear, it suffered a textbook blow-off and faded right back down to the mid-teens, closing at 1464 just days later. As day trading expert Tim Sakes points out regarding this exact type of setup, trade like a sniper, not a machine gun. When you're navigating incomplete headlines and high-burn biotechs like this, you absolutely have to apply strict risk rules and wait for clear chart setups rather than trading on pure emotion. The traders who actually survive in these volatile biotech waters are the ones who let the price action confirm their bias rather than just guessing based on background noise. Section 6. The ultimate biotech gamble. Let's synthesize all of this to really understand what investors are betting on here. This is your classic high-stakes biotech scenario. Nurix is playing the long game, currently carrying an accumulated deficit of over $1 billion. Let that sink in. Investors buying this stock today are essentially ignoring that massive deficit, choosing instead to pay a premium for a future medical breakthrough. They are trading future hopes, not current profits. So ultimately, the entire NRIX story boils down to this one critical question. Can their groundbreaking targeted protein degradation science cross the finish line before the runway disappears? I mean, they've got the AI engine, they have the big pharma partnerships, and they have the clinical targets. But that clock is ticking and the cash is burning. It is a fascinating race, and definitely one we'll be keeping our eyes on. Thanks for joining me on this explainer.